Good afternoon, everyone. Today we have Michael Flight with us. Michael is a founding principal of Concordia Realty Corporation and more recently CEO of the Liberty Real Estate Fund LLC, the world's first net lease security token. Michael has been active in commercial real estate over the past 35 years. He is not only a real estate entrepreneur, but he's also a blockchain enthusiast and the security token evangelist. Michael has been featured on CNBC and he's a curator of the Chicago Blockchain Real Estate Collective. And today we'll be talking about blockchain with Michael to learn about his journey in blockchain. Welcome, Michael. We are so happy to have you with us today. I know that you're doing tons of stuff in the blockchain. So how did you get interested in blockchain space?
I hang around with a bunch of really smart people, and you talk about the power of networking. So I just have, through positioning myself in different organizations and things like that, meet some incredibly smart, incredibly talented people. And I didn't know enough. I met some guys that were talking to me about Bitcoin in 2014, and I didn't understand anything about it because I was a real estate guy. And I'm like, well, this is just a math problem. And it's like, it seems to me like it's just like a dollar, it's fiat currency. And I didn't understand the whole thing. I understand Bitcoin now, but I completely, because I was from real estate as a hard asset, this doesn't make sense to me. And so, and then later on in 2017, all these ICOs started coming, which are initial coin offerings. And they're like making hundreds of millions of dollars and there's nothing behind them. And I'm like looking at this, and I started talking to some really successful blockchain guys. And I said, this doesn't make any sense to me. I'm like, why wouldn't you tie the coin to something like gold? Or better yet, why wouldn't you tie the coin to real estate? Because then you would have a tangible asset. And so I'm like, I want to do a real estate stable coin, because as you know, stable coins are usually, something that's like the USDC stable coin is tied, pegged to the dollar, and there's a euro stable coin and things like that. So I'm like, why wouldn't you do a real estate stable coin? Because that seems to me the best possible solution to everything. Because you get the cash flow of real estate, you get a hard asset of real estate, and you get the decentralized nature of blockchain.
Have you done any transaction?
We have put together a fund to, and we're raising money for the fund right now. And we're getting ready to do our first close, and then we're going to start buying single tenant net lease properties for the fund. So, and then after we do the close, those first, and we can do a few different closes on the fund, but after we do the first close, those tokens will be issued to the blockchain. And then within 3 months, if they're accredited investors, the accredited investors can actually trade their tokens. And after a 1-year lockup period, the tokens can trade to accredited or non-accredited investors.
So are you guys using smart contracts?
Yes. Yeah, we actually have partnered with a company called Securitize. And so Securitize is a technology platform. We don't do any of the technology. So, and I always tell people, they're always like, well, are you doing your own smart contracts? I'm like, no, I'm not smart enough to do a smart contract. But because, we're a real estate company, I think that's what we're really, at the end of the day, we know what we're doing in real estate. And we went out, did a worldwide search. This was, a few years research and found the best providers from legal, from accounting advice, and Securitize in the United States probably is the best positioned tokenization platform. So it's like a combination crowdfunding platform, but they also have the technology back end. So it's really beautiful. When you go on their website and your investor experience, it's like you have the dashboard. It's better than most investor management software I've seen. Plus, the other thing is on the dashboard, once it comes to close to the 1 year lockup period expiring, there's plugins to the dashboard for exchanges, so that, like, for example, a well-known exchange here is T0, and T0 is going to be at our blockchain summit. But you can, if you want to sell some of your tokens, you can list them on T0. But Securitize also has what's called the registered transfer agent license, so that when the securities are traded, they're all accounted for through the blockchain, but they're also done in a legal manner. They're transferred through a licensed transfer agent. Securitize is also a licensed broker dealer, and they also have what's called an ATS, which is a automatic trading system, and it's kind of like a matching service. So if I bought some of Raj's tokens, and he did a multifamily apartment building, and he tokenized it, and if I said, Raj, I want to buy, I'm out looking, and if Raj lists some of his things on this ATS, and I say, oh, that's a good thing, I can trade through that ATS. And there's a number of ATSs throughout the United States too, but we just went with Securitize because they were the furthest along. One of the issues last year and going into this year is, if anybody's in software, especially in the 1990s, there was a thing called vaporware, where people would just announce that they're doing things, and there actually wasn't any product behind it. They would just say, yeah, we can do this. And that's what we found with every one of these technology providers, that they say they can do things, but they don't really know real estate. And so we, have a really good relationship with Securitize, and we were kind of their guinea pig with real estate. So, they had never done a real estate deal before, and we got them through the particular things, like even to the point where it's like, most of our investors are going to probably want to come in with an IRA. Do you guys, how do we do that? And like, well, we don't have a plugin for that. I'm like, well, no, that's unacceptable. You need to figure out how to get the plugin now. So that's, and it's little things like that. Or they weren't used to working with K1. So we had to spend extra money with our accountants, working with them to figure out how to do the K1s and things like that.
So let me ask you, with the IRA, you brought up a really good point that I was thinking. So you need a custodian, right? In the current situation, if you wanted to use your IRA or 401k to invest in real estate. So how would that work in the blockchain side? You still need a custodian and somebody, right? And then I don't think custodians really understand the fiat currencies versus digital currency.
Yeah, we found there's actually 3 IRAs, self-directed IRA providers out there that are doing digital assets. So especially when Securitize said, well, we don't have the plugin for this. We've got a relationship with these guys over here. See if they'll spend the money, because we don't want to spend the money. Anyway, we found 3 different IRA providers that are already doing digital asset custody. So they were familiar with investing with Bitcoin and investing with cryptocurrencies and things like that. So it wasn't that much of a stretch, because we explained, and one of them was really excited about it, but had never heard of a security token. It's like, well, this is exactly a 506c. It's exactly the same thing. And, so they just had to put together some sort of custody situation so that basically the wallet is held by the custodian. So
what is the name of your coin?
It's the Liberty real estate token, or Liberty RE.
So people can mint that. We can have the power to mint your coin and get up.
No, with security tokens, they're very different. They're run on the exact same rails as cryptocurrency. So they run on a blockchain, but they're different than the fact that they are a security. So like, for example, you hear people like lose the keys to their wallet, or their, all their Bitcoin was on one particular laptop and the laptop died. And so now their Bitcoin is gone. In the situation here, which is why you want a registered transfer agent, if there's an issue where you happen to lose, access to your securities or something like that, or let's say somebody came in and stole your, securities, like they stole the piece of your apartment building, or they stole, $50,000 of shares, from our fund, you could go in with the necessary proof. The issuer can destroy those security tokens and reissue new ones. So it's really a much more secure situation than owning cryptocurrency, because they are licensed. People that invest in it, have to get accredited. So they have to show that they're an accredited investor. We have to do what most, syndicators should be doing, which is called AML, KYC. So it's anti-money laundering, know your customer. And so all that is done. And so, it's a much more, it's much different than, this murky area of cryptocurrency. And I'm not slamming cryptocurrency. I'm just saying that this is regulated. It's, we're doing everything according to SEC rules. We are doing a non-US portion of the fund. And so that's a little bit different, but everything in the United States is, by the book, regulated securities, just like, you and Raj would be doing.
As far as my understanding goes, I understand all the records on the Hyperledger are immutable. So when you say they can destroy the records, so if I'm assuming that you are creating a private ledger?
No.
And okay.
So the tokens would be reissued. So those other tokens would no longer be good. So it's still all in the blockchain. Everything is recorded into the blockchain, and it's still, you can go back and trace all the things in the blockchain, which is why when these guys, go out and, do some of these things where they shut down a pipeline and then get Bitcoin, in the news media talks about it. It's like, well, Bitcoin is not secret. I mean, you can see everywhere. You might not know who it is, but you can see exactly where the coins are. And if the coins ever go anyplace, then, that's how they can find you and arrest you. So it's exactly the same thing with security tokens. You can see where all the coins are. You can see where things trade. You can see who owns what. And if they are stolen, like I say, those security tokens can be shut down. They're done what's called burned, and there's just new ones reissued. So what the really nice thing about the working on a blockchain is the record keeping, and it also helps syndicators, sponsors, and those type of people, because it's a much better, faster, and more efficient way to maintain your investors. And from an investor standpoint, they not only get the potential for liquidity, which they did, like when they were investing with us in shopping centers, they don't have that type of liquidity. They're in the ride, whether they want to stay there for like 1 week or 20 years. I can choose when I want to do that. And as I tell the story, when I mentioned that my father had died in 1986, he did an investment in a hotel deal in like 1984, 85. And after he died, my mother tried to get out of it, and they wouldn't let her out of it. So she's been along for the ride, and the hotel finally went into foreclosure, and the deal finally closed last year during COVID. So she couldn't get out of this thing for more than 30 years. And they just basically ripped her off. And so what we're trying to do is solve for some of those problems, in that if you really need to get some money, like let's say you're having a wedding or something like that, you need the money, or somebody needs to go to college, you can sell all or a portion of your tokens. The other thing that we've worked out is we've worked out an agreement with BlockFi that eventually, when they get comfortable with our net asset value and that it's, you know, worth a certain amount, you're going to be able to deposit your tokens with BlockFi and then be able to borrow against those tokens and not have to even have a taxable event.
Mm-hmm.
So, and there's all kinds of other cool things like with Securitize, we can not only pay directly into somebody's bank with an ACH payment, you know, so that there's no checks involved. It just goes directly in the bank and you can get US dollars, but you can also take your monthly cash flow in a USD stablecoin, or you could take it in Ethereum, or you could take it, depending on the blockchain that we issue on. We're more than likely going to issue on Algorand. You could take it in Algorand. But if you have the USD stablecoin, you could also, we've got an affiliate program with BlockFi. You could not only get the cash flow from us, but you could deposit it with BlockFi and get an extra 8% on your money while it's sitting in BlockFi.
People who do not understand the digital currency that much, because they still want it to, in their mind, they're converting that into dollars, right? Even if they're investing, like say 50,000 as a digital asset with you in one of the properties in triple net, in your investments they're doing. So, but when they're trying to convert the 8% cash on cash or the 20% annual return, in their mind, they're thinking, okay, how do I convert that into dollars, right? Into the money that they can touch, something concrete. So what is the way of doing that for them? Is it like easily transferable?
So if you invest in our fund, just like if you, Vinky and Raj, at some point do a tokenization and tokenize one of your properties or your funds, it's exactly the same thing that they're always used to doing. So if it's a 506B or a 506C, it runs exactly the same way. And they never, ever have to be involved with, you know, taking the Ethereum or cryptocurrency. They can just get paid in US dollars and it'll go directly into their bank account. The thing is, if they decide to go and get paid, and I would recommend like a USD stablecoin, because it's 1-for-1, dollar for dollar. So, and it's just like, you know, having just a digital dollar.
Right.
So if you choose to do that, then it opens up this whole new world where you actually control your money. And so if you're getting your money deposited in a bank account, like I just saw, and I, you know, all my business bank accounts, they charge me, you know, to hold money in there. We've got one right now that because of the way the real estate taxes haven't, we were supposed to pay real estate taxes in August and Cook County can't get their act together. So we just keep collecting money in an escrow account. It's up above 800,000 now. And we have to pay to keep that money in the bank, you know? Mm-hmm. So if you choose to do this, you can keep that money, and it's flexible. So you don't have to keep it in there. You know, you don't have to like lock it up for 6 months. It's not like a CD. It's like the money, when you put it in there, it starts earning interest if you need to take the money out, but you actually control your money. So if, for example, where are you from originally, Vinky?
I'm from India.
Yeah. So if you decide to go back to India and all your money's in your digital wallet, you know, you can just get your money right there.
Right.
And it goes with you. And so you actually control your assets, which it's going to be a lot. And believe me, I went through this. I told you my experience. It's like, I didn't understand what was going on with cryptocurrency, but now that I see, you know, this is going to be the new financial system. Exactly. And at some point in the very near future, because all major banks are now, you know, and actually with Securitize, our securitization platform, Morgan Stanley just put 50 million into them. Mm-hmm. So all these big banks, everything is going to be eventually on the blockchain. And so you should at least know a little bit about, you know, what the blockchain is and what a digital wallet is and all the rest of it. You don't have to get all into this crazy stuff, but you should just at least start educating yourself a little bit. And I always, like I said, all kinds of really smart people around me 5 years ago were saying blockchain, blockchain, blockchain. And I was telling my kids, I don't know what this is, but you need to figure it out, because this is going to be the future. And I had no idea what they were talking about. I just knew that there was a bunch of smart people around me. So I set out to figure it out.
And that's good, because I remember the internet days, people didn't used to think about big about internet like Google or Apple. Who thought, these companies gonna grow exponentially? And now blockchain is the future. It's gonna be bigger than the internet. So can you talk a little bit about your fund too, this digital fund, how different that is from the regular fund?
Well, it's exactly the same as a normal fund. But just to give you remember when I talked about how we wanted to make a super stable coin. And so we've always been in the retail real estate business. It's what we know best. And some of the most super stable, super conservative assets are single tenant, triple net leases. And so, for example, we're, looking at and probably going to make an offer within the next week on a Jiffy Lube down in Arkansas. Now, Jiffy Lube can have a franchisee, but Jiffy Lube, the company, is actually owned by Shell Oil Company. Mm-hmm. And the entity on the lease for these two Jiffy Lubes that we're looking at are actually Shell Oil Company. So I don't know about you, but at some point, I think Shell Oil Company might be as good a credit as the U.S. government. You don't get any better just the amount of assets they have, and they're worldwide. And it's the same thing, CVS, Dollar General, Dollar Tree, all these companies are what are called investment grade credit rating. And so they just pay day in and day out. And even all through COVID, these things never stop paying, so, and it's just, and if you take a look at the occupancy on these, the historical occupancy on single tenant, triple net leases are anywhere from 97.5% to 98% occupied all the time. Mm-hmm. So it's literally, and again, what we like to describe them as is bonds wrapped in real estate, because you get the credit of the tenant. And so our fund is to put together geographic diversification, industry diversification, and credit diversification. And we also realized about 3 or 4 years ago that there was a certain amount of retail that was going to go online. And so we tried to design the fund back in 2018, 2019, when we started playing around with it, to be internet resistant. And it also proved to be COVID resistant and pandemic resistant so far.
Where do you see yourself in this path 5 years from now or 10 years from now?
Oh, that's a tough question. What I'd really like to be doing, and my why is I would like to be creating human flourishing through generating wealth for people. So I'd like to make real estate investing, because I truly believe that real estate investment is the best investment you can possibly make over anything. I tell people it's the oldest asset class, it's the original asset class, and it's the largest asset class. So if you could create liquidity for that $280 trillion locked up, it's not only going to bring human flourishing to people that right now can't, they might have this property that they can't get liquidity for, and so the blockchain is going to change, and it's going to happen that we can't even see how much it's going to change. Just like you couldn't see, what was going to even happen 10 years ago with an iPhone. Because when I started out, my car phone was literally in the trunk of my car. So, stuff is really going to be changed. But what I really, really, really want to do is, there's been billions of people that have come out of abject poverty since 1990 and have just lifted up. And that's all going to be part of the middle class. And if they don't have some way to generate wealth and create wealth and hold on to wealth, that's all going to, go away. And so once people can get assets, and we know that, and that's more than likely why you guys are in real estate, is because it's like, real estate creates generational wealth. And so that's what I really want to do. And my why is, how do we create generational wealth so that somebody could even invest $10 on their cell phone and buy into a London office building, or buy into, apartment in the middle of Kentucky, or, buy into a shopping center in Santa Monica, California. And they at least have, a tradable asset that they can access, that cash flow, that wealth generating capacity that everybody else in high net worth families and family offices knows is there.
Yeah, this is so funny. My project was like that too, on real estate and blockchain, how we can make it accessible to everybody. But that's the topic for some other day. Thank you, Michael. I really appreciate your time with us today.